What are the tax implications of receiving BOOC in a farmland 1031 exchange? Imagine you are swapping one piece of farmland for another, hoping to defer taxes on your gains. But what happens if you get some extra cash or property during the swap? That extra stuff is called BOOC. It might seem small, but it can have big tax effects. When you do a 1031 exchange involving farmland, the goal is to postpone paying capital gains taxes. But if you receive BOOC, the IRS treats part of your gain as taxable income right away. BOOC can be cash equivalents like checks or money orders, or even property that isn't like real estate. It also includes relief from liabilities that are higher than on the new property. For example, if you owe more debt on your old farmland than the debt on the new land, the difference counts as BOOC. Receiving BOOC cuts into your tax deferral benefits. You might still defer most of your gains, but the part you get as BOOC is taxed as capital gains in that year. This can affect your cash flow and how much money you have to reinvest. To avoid paying taxes on BOOC, many investors try to exchange into farmland of equal or greater value. They also aim to assume or increase debt on the new property to match or exceed what they had before. It's best not to take cash or non-like property personally during the exchange. Sometimes, investors accept BOOC intentionally if they need liquidity, but they understand it will trigger taxes. Remember, the main point is that receiving BOOC in a farmland 1031 exchange means you must pay taxes on that amount now. Planning your exchange carefully helps you keep as much of your gains as possible and preserves the tax benefits of like-kind exchanges. Proper structuring involves making sure the value of your new farmland matches or exceeds the old one, and managing debt levels wisely. If you do this, you can keep your tax deferral intact and make the most of your farmland investments.